El panel, Navigating Geopolitical and Climate Challenges, Empowering Caribbean Development Banks for Comprehensive Security. Invitamos a los señores Laverne McFarlane, economista senior, CARICOM Development Fund, David Lowe, Managing Director de Development Bank of Jamaica, Lauriston Matthew, CEO, St. Kitts and Nevis Development Bank, Sara Davo Bosa, encargada de Misión, Agencia Francesa de Desarrollo, Uke I. Ijurika, COO, Oficina Caribe, African Export-Import Bank, y el señor Henry Anderson, CEO, Development Finance Corporation, Belice, quien es además el moderador de esta sesión. Muy bien, dejamos en manos del señor moderador esta sesión.
Okay, thank you. Good afternoon. So, ladies and gentlemen, distinguished panelists, esteemed guests, good afternoon. It is my honor to welcome you to this pivotal discussion on navigating geopolitical and climate challenges, empowering Caribbean development banks for comprehensive security. In recent years, the Caribbean region has faced a myriad of challenges that have tested our resilience and adaptability. From economic repercussions of geopolitical actions, such as tariffs imposed by larger countries, to the devastating impacts of climate change. Our region stands at a critical juncture. The heavy reliance on tourism and high debt levels makes us particularly vulnerable to these external shocks. Recent geopolitical actions have had significant economic and security implications for economies. The net trade deficits in the region, coupled with our reliance on tourism, amplify the indirect impacts of these actions. It is imperative that we understand and navigate these challenges to safeguard our economic stability. The projected impact of tariffs on GDP growth in the Caribbean in 2025 is significant. For example, Barbados is expected to face real GDP losses ranging from 1.27% to 2.33% due to the 2025 US global tariff hikes. The same is expected for the rest of the Caribbean due to reliance on imports, tourism, and the impact of the 10% tariff on Caribbean exports. The Caribbean is on the front line of climate change, facing more frequent and intense hurricanes, rising sea levels, droughts, forest fires, and coastal erosion. Our small economies are less adaptable to these changes, making the role of development banks and institutions like the Green Climate Fund crucial in financing and implementing climate change adaptation and mitigation strategies. The region faces significant challenges, with climate change damages projected to increase from 5% of GDP in 2025 to more than 20% by 2100 if no regional action is taken. Efforts are being made to build resilience, including accessing climate financing, improving disaster risk management, and developing sustainable energy solutions. In 2025, Belize ranked as the second most affected country by extreme weather events according to the Climate Risk Index. Comprehensive security is not just about protecting our borders. It involves integrating social, economic, environmental resilience, technological, and digital security. A holistic approach to security is essential for sustainable development in the Caribbean. Regional collaboration is key to effectively addressing these comprehensive security and development challenges. While CARICOM promotes regional cooperation, national interests and political fragmentation often limit its effectiveness. Our small states lack the diplomatic clout individually and even collectively. Our influence is limited. Strengthening regional cooperation is therefore vital. National development banks in the Caribbean often lack the financial tools, technical resources, and scale to provide comprehensive security solutions. However, the emergence of a new global financial architecture presents an opportunity. By working as a system, public development banks and national development banks can leverage support from larger international financial institutions, multilateral development banks, and regional banks to strengthen their capabilities. Today, we aim to explore the geopolitical impacts on our economies, discuss the role of development banks in enhancing climate resilience, advocate for a holistic approach to comprehensive security, promote the importance of regional cooperation, and identify support mechanisms from larger financial institutions to empower our national development banks. By the end of the session, if successful, we should achieve an enhanced understanding of the role of national development banks in shaping comprehensive security in the Caribbean, a strengthened regional cooperation and collaboration, identification of practical steps that larger financial institutions can take to support our national development banks, and development of actionable strategies to address geopolitical and climate-related challenges. I am delighted to introduce our distinguished panelists who bring a wealth of knowledge and experience to this discussion. Dr. Laverne McFarlane, Senior Economist from the CARICOM Development Fund, Dr. David Lowe, Managing Director to the Development Bank of Jamaica, both from the same university, by the way, Mr. Lawrence Matthew, Chief Executive Officer, St. Kitts and Nevis Development Bank, Ms. Sarah Davo-Boza, Project Manager from the French Development Agency, and Oke Ihirijirika, COO from the Caribbean Office of the African Export-Import Bank. Thank you all for joining us today, and I look forward to a fruitful and engaging discussion. So Laverne, I will pass the floor to you.
Thank you, Henry, and let me say a very heartfelt thank you to the organizers of this ALIDE Assembly and for allowing us to have a voice at the table as Caribbean development banks. So at the CARICOM Development Fund, we are mandated to provide technical and financial assistance to the disadvantaged, whether it's disadvantaged countries, regions, sectors, and definitely to the vulnerable, however vulnerability is derived. We provide, within the context of climate resilience and economic sustainability, we are GCF accredited, but we have 7 thematic priority areas within those 2 broad contexts. We have been assisting development banks since our inception, and within that context, we recognize that the polycrisis that faces the region, we have to innovate in a context where funding is being dried up from the region. So how do we then maneuver such that we can continue to be sustainable, be present, and of course, address the needs of our member countries? So in that context, we've been innovating financing instruments where we're looking for non-traditional resources. We're mobilizing non-traditional resources in that context. And we have done so in the past 3 years, and since the onset of the COVID pandemic, we recognize that we've had to pivot, and pivot even more so within recent times with what's been happening in the North. Within the context of the national development banks, we recognize that one of our modalities that we provide with our members, interventions to our member state, is working closely with our development banks. Henry reminded me just before we came on this panel of the assistance that we provided them in terms of developing their IT platform. So we're in the digital space as well. And we recognize that national development banks have a critical role to play in terms of addressing the issues relating to the geopolitical crises, the climate challenges that we face. However, them being pivotal players within the construct of development agenda, we recognize that they're often overlooked in that space. And at the CDF, we're providing the platform to advocate for them to get a voice at the table, and also to ensure that there is a proper representation for national development banks in the space. We are using a very unsophisticated approach in the construct of how we deliver these interventions in empowering national development banks. And so unsophisticated that it's as simple as ABC. And I'll throw in a D, only because we're a development financing institution. And in the construct of we are advocating for national development banks, we birthed the idea of the formation of an association so that there is a collective voice of national development banks within the Caribbean. We're accelerating the investments within the frontier markets, which is essentially the markets where national development banks need to be investing. Regarding the B that I mentioned, we're bridging the gap as it relates to capacity for development banks, because we recognize that there are barriers to getting a voice at the table, to executing on the mandate that is required of national development banks. And we're bridging those gaps in terms of providing the avenues for technical assistance to help build capacity in those areas. Regarding C, so I've done A, B, I'm on to C. We're collaborating with various entities such that we can provide the necessary avenues for these national development banks. We're also catalyzing investments in frontier markets in a construct where we're providing credit enhancements as well as first loss capital in various financial instruments that we're innovating. Regarding D, we basically are creating markets and enhancing where none exists, of course, and enhancing markets that are very underdeveloped in the construct of climate resilience and economic sustainability, so as to ensure that there is a demand for and supply of capital to finance these types of projects, because we need to ensure that within the sphere of climate resilience, a lot of new markets are being developed, and we ought to be prepared for those. So I've gone down A, B, C, D, and I'll throw in an extra one, and you're thinking E, but no, I'm gonna jump to S, because we have this on repeat. And we have this S because it relates to our strategic partners. We see national development banks as our partners, but we also wouldn't have been able to be successful in this space without our strategic partners. And these are our international development banks. We have one here on the panel with us as well, that's Afrexim Bank. Oki will be speaking a little later on. We could not be successful without our partners. And I just want to say heartfelt thanks to you and the support that you've provided. And with that, I'll pause. I don't know if I'm out of time, but I'll pause here in terms of how we've been providing the empowerment to national development banks in the space of the challenges that we face in this region. Thank you.
Thank you very much, Laverne. David, I pass over to you.
Testing. Hello, everyone. I'm delighted to be here today, and like you, Laverne, I'd like to express my gratitude for having the opportunity to express our voice in the issues that are facing Caribbean development banks at this particular crossroads. Jamaica has been on a road to navigate a very difficult set of circumstances. For a number of years, it was faced with high debt, low productivity, and a number of other challenges that were institutionally not conducive for growth and economic development. Over the last decade, with a commitment to fiscal policies, we are now at the point where we're looking at a significant improvement in our macroeconomic stability, specifically reducing our debt to GDP from approximately 155% of GDP, debt to GDP, to just about 60% of debt to GDP. I think there are some other things that have happened that have contributed to the environment, and the reason why I'm mentioning this is because in terms of looking at development and meeting the challenges that we see ahead, the environment has to be first conducive to be taking interventions through a development bank. Now I'm going to just take you through 5 specific challenges that we acknowledge that are problematic, notwithstanding our successes to date. And in the light of climate change, supply chain disruptions, and a number of other geopolitical things that have been mentioned throughout the day, we believe that we're positioning ourselves with our international partners to take certain strategic steps to address a couple of these challenges. The first is access to capital. As a small open economy, we are still faced with the challenge of having access to capital. First, for the purposes of development. Second, at the right cost. And third, for the eligibility of the recipients and the beneficiaries that we deem to be important as part of our development at home. If we look at each of these, we have tried to understand where the challenges are and to understand how we can improve the environment to make each of those different. First, through availability of capital, we have been able to find ways in which we can work with our international partners to bring capital to our shores through good corporate governance and defining policy interventions that are conducive with making international standards available and attractive to lenders and funders. Second thing is to get our own private sector involved, understanding what the development thesis is for a country, and how they can have ownership in making a distinct intervention through their own activities and supporting the national effort in increasing our chances for sustainable development. And third, eligibility. I'm going to touch on that a little bit more later on, but the important thing about eligibility is that once you have the cost of funds and availability of funds, how the beneficiaries and the recipients can now access this funding in a way that actually makes sense, in a way that they can find a way to make a return on investment. Now let's take each of those. The Development Bank of Jamaica provides 3 distinct capital solutions. The traditional debt, which is through funds that are made available for credit. And we work with our local partners in the banking community, both in terms of deposit taking and microfinance. We then provide funding for different purposes across different sectors through them as their partners, and they identify the risk parameters within the scope of the beneficiaries and the candidates to whom we're lending. The second thing has to do with our ability to find partners who can understand where opportunities for the evolution of a traditional sector. And in the case of Jamaica, agriculture is one of those traditional sectors that continue to play a role in not just sustainability for food security, but also in a way that we can find competitive avenues to move the value chain forward, not just to satisfy local consumption, but also to find markets internationally. The other aspect to our capital solutions is providing grants. And these interventions are specifically geared to improving aspects of corporate governance, competitiveness, and creditworthiness in terms of how these candidates and beneficiaries can have access to capital and make an impact. And the third, and probably the most important pivot that we've made recently, is understanding the role of equity. The traditional cultural way for access to capital in Caribbean islands like Jamaica has been the route to go to a commercial bank or lending agency to seek credit to be able to either start a business, expand a business, or modernize a business. We believe that our interventions to date have been impactful because what we're doing is changing the thesis from just simply being about credit and understanding that patient capital has to find a way into the development world back home in Jamaica. And this has been working well so far, because over the last 8 years, we've been able to find platforms who are willing to partner with us, both local and international, where they will be supported by us matching funds, going into particular areas where they can support traditional and frontier industries in making a mark on development. And we are of the belief that if we can find the right healthy balance between debt and equity in terms of capital calls to allow business to thrive and to be able to move forward in terms of their own innovation, this will be a major marker for us, and we're looking forward to seeing the results going forward. But in addition to this, Jamaica has also introduced 2 initiatives which I believe has played a role in allowing this particular intervention to work. And the first is by creating a junior stock exchange where a liquidity event is possible in the future, where an investor or a founder can scale their business and seek additional capital, not in the traditional sense of going back to a bank or a lending agency, but to seek an ability to get liquidity through offering shares on the local stock exchange. And that micro market, that junior stock exchange, has produced over 20 new members, all of whom have grown, scaled for employment, scaled for revenue to the government, scaled to the point of some of them being able to export. But nevertheless, the point is they have been able to get these opportunities, particularly through access to equity as a source of funding. And we continue to look at how this can work. The most recent thing that was announced this year is that we're also looking at a micro stock exchange, which means that the MSME community, which is still very important to us, has another route. So they don't need to be at the point where they can get to the size of what is required for the junior stock exchange, but to have the ability to tap a market for equity at an even smaller level of their growth and development. And that we're hoping to launch by 2026. So with those 3 in mind, we're looking at how we can change the thesis and the conversation around access to capital. The second area has to be around what we believe is important as a development bank in terms of our interventions. So we see ourselves both as large scale and small. And just very quickly, in terms of large scale, we've been very active in public-private partnerships. And we have been able to do a number of infrastructure projects in that space where we're crowding in private investment rather than the government or the state carrying the burden of these developmental projects. And also looking at ways in which we can enter the new domain of seeking green technology, green financing, and so on. So we're very excited about that possibility through those types of interventions. On the other side, any economy will note that it requires the need for small businesses or entrepreneurs to be very active. Existing ideas, being innovative, evolving, unicorns being created, all of these are opportunities that we hope that we can play a role in terms of our mandate as a development bank. The third is understanding where we need to figure out how to de-risk. Because again, because of the culture of a small island and how we have developed businesses over time, we have to understand that we need to find ways in which we can enter the market and de-risk. And one of the ways that we're doing this is through offering specialized products tailored towards particular types of risk. So if it's agriculture, we've found ways in which we can put credit guarantees in place, supply chain financing, reverse factoring is something that we're also trying to deepen. But the point is we're trying to understand where the problems lie and to be very specific in what problems we're trying to solve. The fourth is really about diversification. And I would have mentioned agriculture before, and we believe that in continuing to build on the value chain where we move from a primary agricultural producer to more value add in more specialized areas, we believe that looking at import substitution can be very impactful because we import a significant amount of food on the island. And if we can find strategic places where we can look to support a particular sector, that's what we're here to do. And that's what we're trying our best to understand through empirical data and relationships, how to build that opportunity. And the other thing is innovation. We're not just looking at products, but we're also trying to look at how services can make an impact. And these services are in the digital domain. By helping to build out digital infrastructure, we believe that we can unlock opportunities for new entrepreneurs in the services sector that can increase productivity, be able to go and do AI-enabled tasks that can also help in our development and take us to the next level of competition and competitive interaction. And the final thing is linkages. We believe that as a small island, we can also look at how we can pivot, and through the lens that we look at where opportunities lie. We have a very strong agricultural market, and we also have a strong tourism market, and the linkages between the two is something that the Development Bank is also trying to understand and look at. So we are going to support sectors that can then tie into import substitution again, supporting the hotel trade through agriculture, helping to make manufacturing more possible by identifying more of their needs and helping them to support that in their growth and the introduction of new hotels coming to the island. And some of these interventions are bearing fruit, so we continue to look forward to see how the Development Bank can make a role in that. So with that, I'll pause and just say very quickly that we also have to appreciate the help of our partners, EU, IDB, FD that's here, just to name a few. And there are too many to name, but you'll know who you are. We thank you for that.
All right, thanks very much, David, and that's a very impressive lineup of strategic actions that the bank is taking. Lawrence Dunn, pass it to you.
Yes, good afternoon to everyone. Just like my other colleagues, I want to say thank you to ALIDE for the opportunity to be present here today and to involve Caribbean Development Bank into the discussion. St. Kitts and Nevis Development Bank is a national development bank and will lend directly to customers. So we are at the forefront of some of the support and some of the opportunities that the Caribbean Development Fund have on. We've have some support from the CDF. And we believe as a National Caribbean Development Bank, we do more than lending. And we are asked to not just lend, we are asked to have an impact on the communities that we lend. We are asked to, in general, take on more risk than some of the commercial banks. And when we do that, naturally, the risk and our risk profile is much higher. Our loans are subject to an increased ability for delinquency. So for a local development bank, one of the ways that we are looking at how we could do lending more profitably and sustainable, we find that the old model for us might not be sustainable, and we have to look at ways of disrupting our own self so we can be much more sustainable, we can lend more profitably, and we can serve the communities that we are asked to serve. For us, as we lend and as we interact with a lot of our customers, one of the challenges that we are finding is that a lot of the customers, a lot of those clients that we have, I want to say maybe not fully appreciating the climate challenges, but we are not finding that they are, let's say, the impact. Those that are impacted the most at this point is probably some of the ones that are the funding and the resources are not reaching. So we have to find new ways of having sustainable funding, new ways of finding partners that can appreciate the different levels of risk that we are asked to take on. And once we take on those risks, how do we do that sustainably? How do we do that in a way that is profitable? Because without our institution being profitable, then ultimately our mandate fails. So a lot of what we do, we have to do it by international standard. That's why being a part of this discussion, this presentation, is very helpful for us because we get an opportunity to share ideas, to see how others are doing it, and be able to participate in a way that can make us more sustainable. So being a part of this discussion for a St. Kitts and Nevis Development Bank, as a very small island state, we are very vulnerable to the effects of climate change. We are very vulnerable to all of the different shifts in the global economies. So for us, being here today, having an opportunity to form new partners, not just in the region, but internationally, can go a long way in helping us to fulfill our mandate. We believe we have to utilize a lot of the new technologies to enable us to lend more efficiently. We have to look at new funding models, new ways of assessing our clientele, new ways of coming up with products that we can personalize to the different variety of customers that we are asked to lend, whether it's in agriculture, small business, tourism, even mortgages. So for us, as a small bank, one of the ways that we think we can be sustainable is to innovate, and innovate radically. A lot of times, because of the different regulatory environment that we are faced with, we are sometimes the last to use new technologies to assist us. So we believe we have to utilize all the new technologies and all of the different models that are available to us. We have to start looking at AI. We have to start looking at generative AI to help us to personalize our lending. We have to innovate. We have to disrupt our own self. We have to look, even in banking, we have to start looking outside of our own sector at times to see how not just banks in our sector doing it, but we realize how a lot of the bigger organizations and corporations such as Apple, Netflix, Google, all of the different ways that they are innovative on a daily basis to serve their customers. So we believe that for a small development bank, a small island state like St. Kitts and Nevis, having international partners to assist us in that journey is very helpful. Because as we participate in a lot of these discussions, we realize that we share a lot of the common challenges, and we do not have to reinvent the wheel to assist us in being sustainable. So for us, we are thinking of using technology, moving our infrastructure completely to the cloud. Once we do that, we believe now it's open for us to be able to utilize a lot of the different technologies that are out there to assist us in moving forward and lending sustainably. So again, we want to say thank you to ALIDE to inviting us as being a part of this, part of the discussion, part of enabling us to expand and to find new partnership so we could lend sustainably and continue to serve the communities that we are asked to serve. If we do not serve a lot of those customers, they have no way of accessing funding through the normal channel, through a commercial bank, through all of the different areas, because a lot of commercial banks for them consider them too high risk. But yet, when we lend to these high-risk customers, we are still being assessed through the normal assessment channels of a commercial bank. So we need that understanding. We're not asking to operate below standard. We're asking to understand and find different credit assessment models to assist us in continuing to provide the development that is needed to that particular community. So I just want to say thank you to Henry and ALIDE for allowing us to participate in this discussion today.
Thanks very much for sharing that, Lawrence. Sarah?
Yes, good afternoon, everyone. First, thank you, Henry, ALIDE, and their host for the invitation and for considering the French Development Agency for this panel. So maybe a few words about AFD. Well, is the French Public Development Bank and works over 115 countries, including many in the Caribbean, to promote sustainable development, climate resiliency, social inclusion, gender equality. Well, actually, all of its operations are aligned with the Paris Agreement and Sustainable Development Goals. So more globally, EFD Group is composed by Proparco, which works with the private sector, and also Expertise France for technical cooperation. Specifically, the French Development Agency works closely with national and public development banks, public institutions, and also other multilateral banks. And finally, it also takes part, of course, in regional coordination, collaboration, supporting, for instance, ALIDE, and also by leading the Finance in Common coalition to empower public development banks worldwide. And so now, what about the challenges in terms of development and security? Well, I think that development cannot be separated from security. It's not possible without security. In fact, security must be viewed from a comprehensive lens and considering also the vulnerability of the region here in the Caribbean. We can mention the economic shocks from global disruption that are already endangering the socio-economic security. Also social fragility with rising inequality and unemployment. We can also mention geopolitical challenges due to several factors, but we can mention the energy dependency with fossil fuels. And finally, on top of that, we have climate vulnerability. Here we are on the front line of climate change and also biodiversity disasters. That are endangering our capacity, the security to live in the region. And also that impacts the other challenges. So every challenge is interconnected and security and development rely on it. So that's why we believe that national and regional banks, like here my colleagues, the Development Bank of Jamaica, St. Kitts and Nevis Development Bank, are key actors because of their proximity, because they know the region, the challenges, and they have the mission to ensure the development and security of people and in the country. So on the other hand, we have like the international organization and development banks like the French Development Agency that can financially and technically support them. It is, by the way, our strategy to empower and to partner with them as we lead, as said before, the Finance in Common coalition. And we can provide long-term capital, concessional capital, technical expertise, and also sharing experiences to respond to these challenges. So concretely, what are we doing in the region, in the Caribbean? We have been working directly with public development banks through credit lines, technical assistance, technical cooperation to support sectors like agriculture, resiliency, food security, also socio-economic challenges, and gender equality and on. Here in the Dominican Republic, we have been working with Agricola, with a great project, and also starting with Mandex, which we are proud of. But we also have been working in the region with other countries, with Jamaica, with the Development Bank of Jamaica, with Cuba, and also Caribbean Development Bank. Finally, we are also working on a regional project, screening the Caribbean financial system, financed by the European Union's funds LACIF, that involves 3 central banks, the Central Bank of the Dominican Republic, the Eastern Caribbean Central Bank, and also Bank of Jamaica. And this initiative aims to ensuring the stability and the security of financial system confronted to climate risk, climate shocks, and promote green finance through financial system. And so it will also benefit the whole financial system, other banks, whether they are public or private. So at the end, to conclude, we know that development and security are interlinked, and Caribbean development banks are key actors to address these challenges with the support of regional cooperation and multi and bilateral banks like the French Development Agency in terms of financing, peer-to-peer exchanges, and also technical expertise. So we are here to support. Thank you.
Thanks very much, Sarah. And the work that you guys are doing with Finance in Common is very important and has created an opportunity for the Caribbean banks to get the word out. We had a panel, the CARICOM Development Fund and DFC in Cape Town. And so that was an opportunity for SIDS and the Caribbean to talk about the challenges we face. All right. Okay, I'd like to pass it over to you to talk about the African Exim Bank.
All right, thank you very much, Henry. And let me also start by joining other distinguished panelists by thanking ALIDE for giving Caribbean team a platform to discuss Caribbean issues. So it is important. And for me, it's also an opportunity to add the African perspective to the conversation, which is not something that is common so far. So we now see Caribbean playing a pivotal role in connecting Latin America and potentially also connecting Africa, so which makes it very, very important. So starting up with, first of all, a brief introduction of Afrexim Bank, the African Export-Import Bank, African Multilateral Finance Institution, operating for the past 32 years, only in Africa for a while, but then made a decision to come into the Caribbean about 2 years ago to try and foster the trade relationship between the two regions, which available statistics and records suggest is practically non-existent. I know ITC reports put it about 2% trade between the two regions. It's non-existent. And that is down to the fact that nobody has taken up that role to make sure that we try and curate the trade and make it happen. And this is also in spite of the fact that the two regions share a lot of historical ties and also have similar problems that needed to be sorted out in terms of infrastructure gap, in terms of need to develop critical sectors, SME development, embrace technology, and so on and so forth. So these are all needs that are common. And we now find out that coming in will create an opportunity to be able to give a platform to share lessons learned so that you don't end up reinventing the wheel. You try and find a way to see what has worked elsewhere and then see how that applies to you. And also, if there are things that are done better elsewhere, see how you can also be part of it and take advantage of it. So the Caribbean office of Afrexim Bank has been on for the past 2 years now with an initial investment capital of about $2 billion US. We have currently 12 out of the 15 CARICOM countries who are partner members of the bank, which is actually where we are also able to work. And interestingly, the topic of this panel, it talks about how to navigate through difficult periods like what we are going through now, engineered by geopolitical concerns here and there. We will also see that like in 2020 during the COVID-19 pandemic, it posed a real challenge, especially for the Caribbean, and as, of course, Africa, knowing that the traditional trade partners may have difficulty because everybody has the same problem, and they are, of a truth, trying to solve that problem. So there was that challenge with the Caribbean in terms of sustainability. There was a similar challenge in Africa as well, trying to also find a way to navigate through. But Afrexim Bank played a role, especially with the vaccine acquisition, while our traditional partners were interested in only sorting themselves out vaccine-wise, were able to do a pooled procurement for Africa and Caribbean, which enabled us engage with the manufacturers, negotiate better rates that also helped the big countries like Nigeria, Egypt, get the vaccine at the same rate as smaller countries like Dominica or St. Kitts in the Caribbean. So that showed that partnership between Africa and Caribbean is something that definitely will have a lot of value. And the other subject of this topic, of this panel, talks about collaboration between the development finance institutions. And this also reflects in what we have done since we came. So one of the first disbursements we made was through a development bank in the Bahamas, where we recognize the fact that, yes, it is our interest to ensure that the SMEs in member countries thrive, because whether you like it or not, they are the key drivers of every economy. So they deserve all the attention, they deserve all the development that they can do. And of course, like Lawrence had mentioned, of course, sometimes you find out that taking risk at that space will also pose some higher risk criteria that the traditional lenders wouldn't find appealing to take up. So that means development banks have to play in that role, and they require support of other institutions that have similar interests. So the facility we were talking about to the Development Bank of Bahamas help them reach out to some of the SMEs who otherwise wouldn't have been funded by the traditional financing agencies. So through the support of our Phrasing Bank, that became something that is possible. And the next one is talking about sustainability. We know sustainable development is something that's critical. Both Africa and the Caribbean are prone to some of the challenges that come from climate change and lack of attention thereof. So that means we need to also brace up for sustainable solutions that can help create value and make sure that the region is ready to face those challenges as and whenever they do come. And I'm happy Dr. Laverne had mentioned the partnership that we have built with CARICOM Development Fund to raise a growth and sustainability fund for the region that will help us address this critical area and make sure that the region is poised, and ready to face any challenges whenever they come. And also something related to that would be one of our first disbursements. Actually, the very first disbursement we made was for a climate-linked finance to support some of the educational facilities in St. Lucia, where some of the schools actually were negatively impacted by one of the hurricanes that happened at the time. So we found it important that this is an area that we can support, and indeed, we did provide that level of support. And the other thing we see is important for the multilaterals, for the development finance institutions, is also to create that method of collaboration and partnership. And we've also partnered with BLADEX to support one of our member countries, Suriname. And I believe that announcement will come out very soon about a big development that's happening there, where we've also seen value in collaborating with an institution that share the same ideals to make sure that something that's absolutely important in the member country does happen. So collaboration is key, and we can't do without it. And something that I believe a forum like this will help us booster, will help us create new friends, help us create new partnerships, and form new alliances that ultimately will trigger down to support the member countries that we all serve. Now, the other thing we found very critical is the lack of trade information between member countries. And we think it's also an area that we could provide leadership, and indeed, we have provided leadership in that regard, being able to create a host of digital platform, digital trade platform, whereby information is easily made available to those wishing to invest in other countries. So this is something that is lacking, and this is a value that we can bring, in the sense that you make sure through the investment promotion agency of that country that you have a unified place, more like a supermarket, where willing investors can come in, find out critical information that's available in that country, and then make a decision to invest. And that will now link directly with another important aspect of it, which is the de-risking part of it, where as a development finance institution, you are now able to help those willing to come in and hold them, make them comfortable to invest in the member country through provision of de-risking instruments like guarantees. so that way they are able to come in, they're able to go boldly and do things that otherwise they would have been a little bit afraid to do. So that's another potential area for collaboration. And under this digital offering that we have, we also have created a platform that can provide critical things that are simple, but then that have actually led to this continuation of trade relationship between countries. That is due to lack of information about counterparties. So through our Mansa repository, we're able to provide a platform that SMEs can upload their profile and makes it easier for those wishing to do business with them to get information about them. So that's very helpful, and that we think is something that's very important that can promote trade. And of course, we can't do it alone. We will also rely on development partners to be able to do so. The other critical one, I would say, would also be in terms of ease of payment, because when you talk about trade, ability to see trade happen between two Caribbean countries, for instance, you can't talk about that without payment. And we know over time, due to the de-risking challenges, a lot of financial institutions have had challenges with making international payments. So which is why we created, first, the Pan-Africa Payment and Settlement System, which now has been adopted in the Caribbean by the Committee of the Central Bank Governors, and is now called the Caribbean Payment and Settlement System. And what that does is to help facilitate international payment in local currencies. So that makes it easier, and that makes for continuity, as the case may be. So that is something we think is also very important that we've done. But above all, we also believe that divided we won't stand. I mean, but when we come together, we're able to create solutions. So which is why we also felt that to boost trade between Africa and the Caribbean, we needed to create a platform where people can come in, exchange ideas, and talk about how to make things happen the way it hasn't in the past. So the Afro-Caribbean Trade and Investment Forum has also been created by the bank. This year we're on the 4th edition, having held previous successful events in Barbados, in Guyana, and the Bahamas last year. So this year we will be having the 4th edition in St. George's, Grenada, between the 28th and the 29th of July. And what that does is to bring intending investors both in Africa and in the Caribbean together, and as well as those who are coming in from outside to come in and explore opportunities, network, and make new friends and create new partnerships. That way, we can have businesses sign a MOU, agree to do stuff, and then we, as an institution, will now be able to come in and provide the financing that is required. Another critical partnership that we do is to also work with the local banks, as much as we do with the development banks, because for us, we have a mantra. We believe that working with them is partnership and not competition. So we don't see ourselves, like myself, I wouldn't see Development Bank of Jamaica as my competitor, even if we are looking at the same client, but we are partners, because ultimately the value we bring are things that will change the fortune of the country that we serve. So that way, when we see a client, if it's something that they can handle, we will let them do so. But if it's something that, let's say, due to singular rigor concern, they need support, we're able to step in to provide that support to augment whatever they're doing. And that way, we create partnership. We're able to now work together. We're able to lend and give them an opportunity to make sure that everybody is on the same page. So that is very important, and that's very useful. I did talk about the impact of de-risking on some banks. A lot of them lost correspondent banks. They're unable to confirm letters of credit to their clients. They're unable to provide usual support because the lines of credit they had were cut off because of compliance concerns. We also are able to provide this level of support to the banks. That way we ensure that there is continuation of activities of their down clients, who are the ultimate beneficiaries of this. We ensure that those who need payment service support are able to get so, and those who need trade finance lines of credit are also able to very clearly get this done as and when due. And I want to end by talking about activities in the creative side. This is a very interesting area that is also developing, of course, usually overlooked by traditional funders, but of course can be priority areas for development institutions. We created the Creative Africa Nexus as our avenue to be able to provide support to those who have ideas in this area for development. And we, of course, we work with the development with banks. And we're having conversations already with a few institutions in St. Kitts, and I'm happy my good friend is here and we'll be able to have offline conversations around that to see how we can also leverage on our appetite level, where we can take risk, where the normal risk takers find a little bit risky, and come in and help develop the creative sector in the area. But thank you very much once again, I would say, to ALIDE team and to my co-panelists, and of course, moderator Henry, for doing such a good job. Thank you so much.
Thanks very much, okay. I would like to open the floor now to questions, if you have any questions to direct to the panelists. Okay, I'm not seeing any questions, so Laverne, if I could ask you one, you had mentioned what the CARICOM Development Fund is doing to assist the regions, but if you would, from your lens as a regional entity, if you would look at what can the national development banks do to tackle the issue of resilience and all the challenges with climate change, could you weigh in on that? What would you advise?
Yeah, thanks for that, Henry. And let me just commend my really wonderful panelists for really delving into the issues that faces you, because the challenges are consistent right across the board, and how we attend to them really is the differentiating factors. We recognize that the national development banks play a very critical role in the global development agenda, and we also recognize that barriers do persist. And just in terms of answering the question, Henry, and thanks for that, it will center back around one particular theme, and that is capacity development. And maybe there's one exception in terms of our member countries, Jamaica, David, and maybe to a lesser extent, Suriname, being poster child for national development banks in the Caribbean. We recognize that there is scope and space for improvement in inefficiencies as it relates to governance and operational inefficiencies. We recognize that right across the board, of course, with the exceptions that I've mentioned, there is much room for improvement. So with that said, we think that when we look at navigating the geopolitical crisis, the climate challenges that we face in our region, and just generally in terms of the polycrises that we're facing, national development banks really should be targeting how they can invest in frontier markets. But of course, in order to do this, the capacity needs to be developed to understand how to underwrite the various risks within these new markets, how to expose and export the various profile of risk that it pertains. And my colleague Lawrence Dunn from St. Kitts and Nevis Development Bank mentioned that in his intervention. We also recognize that in order to navigate the space, there is need for continued collaboration, continued build out in the capacity development space. And I'm happy to report that we are looking at ways we can partner with ALIDE to create that framework to develop the capacity for these development banks as it relates to governance, as it relates to operations. Within the modalities of each of our interventions, we typically underscore building capacity with our development partners, especially the national development banks. And we do so by providing a carve-out for technical assistance for the respective projects that we're engaged with the national development banks. Right now, I can refer to the credit risk abatement facility, which is really a credit enhancement facility. We partner with specific financial institutions in member countries. And I can say that national development banks have been playing a critical role where that is concerned. And we've provided the requisite technical assistance to them to help them to understand how to underwrite the various loans, because this facility is specific towards renewable energy and energy efficiency. We have also embedded within our credit risk, our Caribbean Community Resilience Fund, a fund that we launched just January of 2024, where we have a technical assistance sidecar assigned to it. And in that context, we have ensured that capacity building is consistent to our partners, to the project developers as it relates to the execution of the projects. More important, however, is not necessarily pointing to the national development banks, but more so to regulators, to multilateral development partners, that we have to see national development banks as taking on risks where no other institution would take on. And Lawrence alluded to this, where we should be assessing them in a context where we're looking at development risk and balancing out that with the various risks that we typically assess these institutions with: credit risk, liquidity risk, and of course, your market risk. But of course, incorporating in that and pricing into that development risk. And development risk, we recognize, can be perceived or it can be real. And it's a matter of how we create that balance. And I think there's a role to play in terms of National Development Bank themselves also advocating that this is the direction that we need to go in terms of pricing and assessing the various projects that exist. Thank you.
Thanks very much for that, Laverne. David, you mentioned the 5 different, I'll call them strategic trusts that guides the policy steer for your bank. Given the current economic landscape, what are the strategies that the Development Bank of Jamaica is employing to navigate challenges and opportunities of a small, open economy like Jamaica?
Thank you for that question. So let me start by addressing climate, because I didn't really spend a lot of time talking about that. For us, it's a high priority. I would have mentioned the fact that we have agriculture and tourism as our 2 key pillars of economic strength and contribution to GDP. And for us, climate is real in terms of our ability to protect it and have it grow. So specifically, if we look at our tourism product along our coastline, and even in terms of our ecotourism platform, we're seeing signs of climate impacting our ability to continue to evolve in the way that we have and at the pace that we've been evolving. And thankful to our partners, we've been able to integrate planning and development around coastline protection, also understanding what it means for climate action, for the sustainability of that sector, and we're trying our best to try and put things in place with the support of our international partners from a planning perspective. On the backside of that is also resilience. How do we recover from events in this space? And we're also doing things to make sure that there is little or no downtime in terms of how there can be a recovery from a weather event. For agriculture, similarly, we have a number of challenges because we have two extreme things that continue to happen to us. In the last 12 months, we've had extreme weather in terms of 2 storms that have come through and have impacted 4 or 5 key sectors. And one of our most profitable is the Jamaican Blue Mountain coffee, where we were impacted by the loss of a number of trees. If for anybody who understands the technicality of growing coffee, it's not something that rebounds as quickly as other crops. So that has been very impactful. The other thing is in terms of how do we look at introducing agri-tech to support the ability to be resilient and also to be proactive in not just improving yields, but making sure that there's no downtime through protected agriculture versus open field agriculture. We're doing a lot in that space. And again, with our international partners, we're getting things in terms of training, capacity building, and going back to the term that I used before, which is agri-tech. And I must say that we have 2 or 3 projects that have demonstrated proof of concept, where they have been able to put things in place and they were able to come through the 12 months of storms and weather events successfully. So we're going to continue to dig deeper in that space and to make sure that those opportunities exist. The third has been the introduction of insurance products to support both. Not the traditional insurance that one would say for a hotel, but in terms of how we deal with weather. But the most innovation that we've seen is how we deal with crop insurance and how we deal with other types of insurance wrapped around weather, which is proving to be a little bit more helpful in de-risking loans to the sector, because again, notwithstanding the tradition of having agriculture as a pillar of the economy, traditional lending institutions still view it as very high risk for the obvious reasons. So as a development bank, we want to play a role in how we can de-risk that through the introduction of technology, supporting transfer of knowledge, putting in best practices, and certainly making sure that our training is consistent in that regard. Outside of that, we are an accredited entity under the Green Climate Fund, and we are doing quite a lot of work right now developing projects to cover a range of activities, and our partners have been tremendous in helping us to benchmark against other jurisdictions, and we're doing our best to roll out to the support of nation building in those regards. So that would be my reaction to those comments.
All right, thanks very much, David. In our case, the EFC, I think if all goes well, we have our candle lit and we're praying we should go for accreditation in the June board meeting. So we're working towards that. Sarah, we're just about out of time, but I will come back to you because you had one of the shorter presentations. And I'd like to ask you, based on what you've said and all of the work that EFD does over the world, and as I said, leading the financing common system, how can AFD support and work with national development banks in the Caribbean to ensure comprehensive security?
Well, thank you, Henry, for the question. Well, at AFD, we work on the principle of co-construction for a comprehensive solution. So we make sure to engage with local partners and discuss to better understand the priorities, the constraints, and also the strategies, so we can address specific needs, aiming for more security, also looking for better access to finance, climate resiliency, and food security. So we can action different support mechanisms, for instance, financing tools specifically, technical assistance, and also capacity building. First, we support financially banks by offering adapted credit lines tailored to priority areas. For instance, with the Development Bank of Jamaica, we have been working on an SDG-linked loan that focuses on the agricultural sector, on gender equality, and also climate projects as well. And that is completed also with AFD and also IFAD funds for technical assistance and capacity building within the bank. And more recently, we have also started working with here the Bandex in the Dominican Republic to address socio-economic challenges and medium enterprises and gender equality. And we are also going to mobilize funds to also assist with technical cooperation. We also have specific programs for banks like SUNREF for renewable energy projects and AgriNFI for sustainable agriculture. That combines both loans and technical assistance to promote green finance in local banks. For instance, I can mention this great collaboration with Banco Agrícola here, and alongside with the Inter-American Development Bank, we have started a project for sustainable investment and productivity improvement in the agricultural sector. And again, it combines credit lines, technical assistance, capacity building within the bank for more security in this sector. And as of technical assistance as well, sometimes it can help to facilitate peer-to-peer exchanges in the region. As I mentioned before as well, with the Green Caribbean Financial System, we hope that this initiative will promote peer-to-peer exchange in the region between central banks, regulators, but also other financial actors as well, to ensure financial system security across the Caribbean economy. So yeah, in conclusion, we can action different channels. We work closely with banks, with local banks, and also regional actors to ensure climate security in this field and in other sectors as well.
Okay, thank you. We're just about of time, so I'll do a wrap-up. I think what you heard today is the complexity of the challenges that faces this region, both on the geopolitical dimension and the climate dimension. The presentation made by OK is showing how there's a massive opportunity for better collaboration with Africa and the types of tools that the bank is bringing. I am very much interested in the orange economy because we have a very talented region, and getting financing into that space is difficult. So I think that's a great thing. As a region, it's difficult for us to do certain things because we're small and our clout is small. But sometimes while we're looking outside for help, I think we need to focus on what we can do internally, how our regional institutions work with each other, and how we work as national development banks and the need for better collaboration. I think for the past 2 years, Laverne has been touting that, and we're here today, and we're going to make some moves there. It is imperative that we collaborate with ALIDE. I would like to thank ALIDE for this opportunity, and I'd like to thank the General Secretary General, Edgardo Alvarez, for having the vision for the need for the Caribbean to be a part of ALIDE. That's something from a pre-COVID he has been trying to do. So we would also have a big mouth, so I'll finish, right? We'd also like to thank Julissa and Banco Agrícola and the people of the Dominican Republic for the wonderful and warm hospitality. And I would like to thank our panelists for taking the time out to come here and to be a part of this panel. David, he's new into his role and he jumped on the opportunity. And I'd like to thank all of you for taking the time to join us here and to learn about what's happening in the Caribbean. A lot is happening and a lot of opportunities are here. Thank you very much for coming.